Welcome back to Alberta Primetime and our nightly vocal point now. The Bank of Canada's governor is now throwing around the term housing bubble. How much might a burst drop prices and when? Plus, can you invest in other countries' government debt crises and lunch breaks that we don't take? Sound familiar? Our Monday Money panel has a lot to chew on this evening. Kelly Keane is a financial speaker and author. In Calgary, Shafik Hirani, a director and senior executive financial advisor with Investors Group, and Beth Hamilton Keane, a director and portfolio manager with Moore Investment Management. Welcome back to Alberta Primetime, everybody.
Thank you.
Thank you.
Thank you. Analysts are talking about a housing bubble that's about to burst. A 25% drop, some say, in prices over 3 years. Beth, do you agree? And why or why not?
Well, 25% does seem extreme. I do believe that we're heading into a period of at least stagnation, and certainly there will be some threats to the continued momentum that we've seen in housing prices. Obviously, interest rates is one, and the degree that people have levered up and taken opportunity with these lower interest rates has increased the impact that an interest rate increase may have. That, coupled with a kind of a slower or really not growing at all economy, we might even slip back into a slight recession, may really bring some troubled times to the housing market. So it certainly won't be that straightforward upward trajectory that we might think.
Well, yeah, I mean, I bought my house 10 years ago and it's pretty much tripled in value. I feel really sorry for anybody who thinks that, oh my gosh, I better get in now. It's got to stop somewhere, I suppose. Shafik, will Alberta be somewhat immune, though, perhaps, to things that happen elsewhere in the country because of our latest energy-based rebound happening? Or could a correction happen after a bit of a boom and be even worse?
Alberta is very tied to the real estate. The real estate is very tied to the commodities, natural gas and oil. But we have to take into account that natural gas itself hasn't really done much over the last little while, and it's sitting at $4, and it doesn't seem like it's going to go up. So there is a level of immunity if that expansion continues. But real estate, just like any other commodity, is subject to other influences. One is psychology. The other is inventory levels. If supply is high, prices are going to go down. Other is competitive products. So if there's a demand in Phoenix for a cheaper product, then people will go to where it's cheaper. So there are not just the commodity prices. There are other influencing factors on the real estate market right now.
It just gets to the point where you're almost afraid to make a decision because there's so many unknowns. Kelly, we've got a potential housing bubble. If you listen to people like Mark Carney and some other economists, we've got a rebounding Alberta economy, not maybe a full-blown boom just yet. We've got interest rates that will eventually rise. Mark Carney keeps promising that. Maybe it's a year. Yeah. But what are our best options? What are our worst mistakes at this point? How do you know what to do?
I mean, those are great questions, and it depends. Are you waiting to get into the market? Are you already sitting like us where we've got a house and feeling sorry for those people who are coming in today? Number one, you have to look at having that slush fund. Having that 3 to 6 months, I know I say this all the time, of having the emergency fund for troubled times. Right. And then also paying down more than you need to on your mortgage. For heaven's sakes, we don't read our mortgage agreements. You know, making that for savings, right? Increasing our monthly payment or looking at our mortgage document of making those annual payments to leave that cushion so if rates do come up, we're building more equity.
Especially if you look at how much interest you're paying, if you're only paying the minimum. You're not
pull
getting
that mortgage
ground.
Document out,
yeah,
exactly, and look at where you initialed and go, oh my God,
you're paying
right.
the bank.
That's right.
Beth, the Certified General Accountants Association of Canada says that national household debt is now sitting at 1.3, is it 1.3 or 1.5 trillion dollars? Among Canadians who have debt, more than half are borrowing to meet day-to-day living expenses. Bank of Canada, Mark Carney, is saying this about our debt.
Canadians are now as indebted as the Americans and the British. The bank estimates that the proportion of Canadian households that would be highly vulnerable to an adverse economic shock has risen to its highest level in a decade, despite the improving economic conditions and despite the ongoing low level of interest rates.
Pretty strong words. Some are calling them fighting words. He wants us to take this serious. Beth, 1.5 trillion in debt, dire warnings from him. Spending will probably drop because we're tapped out, but that doesn't help the economy. So we've got low interest rates still, which tempt more spending and borrowing. It seems like a vicious cycle.
Well, and it's certainly not absolute. So spending a little less or reducing the momentum again of our spending may not really hurt the economy as much. It certainly won't help it along, but we need to do what needs to be done. And the biggest concern I find from these words is just the worry about the impact of that slight change in interest rates, what that will mean to now more levered households in Canada. More importantly, the fact that people are borrowing to cover their day-to-day expenses. So no longer are people borrowing in general just to buy a car or to buy a home or a major ticket item. They're covering to borrow those day-to-day expenses. This is when we need to start making those tough decisions, bring that spending back in line now. And yes, the economy may stagnate as a result, but that's a necessary strengthening of our foundation that we need to go through.
Shafik, the Certified General Accountants Association says that the average family of four now has about $176,000 in debt. Among all borrowers, 37% have a perception that their debt is worsening. Among low-income borrowers, 46% feel it's just getting worse, not better. So, you know, today, word that Canadians are maybe spending less on summer vacations. Saw that headline this morning. The price of recreation properties is going down. Is there a contraction happening? Are enough people getting it that we're headed for a crisis if we don't change?
Well, I don't know if people are getting it, but there's certainly a contraction happening, and that CGA report is actually kind of gloomy because it also says that people aren't making as much money as they used to as well. And there have been moderate increases in income. You know, the one thing is, if people are up to their eyeballs in terms of debt, they're going to stop consuming, and and that's going to hurt the economy, and that's going to, we've seen revisions towards GDP happen over the last little while. 65% of our GDP in Canada is consumption. And if we're at our eyeballs in debt, then that will hurt the economy, that'll hurt consumption.
It's got to stop somewhere, I suppose, if we're over the top. Kelly, the TD Canada Trust New Home Buyers Report says that 25% of Albertans are planning to or are buying homes with a rental unit in them. That's a lot of people taking a pretty significant step to either create more income or help them pay down debt. Is it a good thing?
I think it's brilliant as long as some things are in line. Now, I don't know if you remember, but years ago, apartment suites, basement suites used to be illegal here in Edmonton anyway, and our city actually, to create some affordable housing, had a number of grants to actually encourage people to have these. I think they're fantastic as long as, again, you have that slush fund. So remember, when you're a landlord, if the plumbing doesn't work or something happens at 2 o'clock in the morning, that needs to be fixed right now. You and your spouse might put up with it for a couple of days, right. But your tenants won't. You want to make sure things are up to code. Like, you're taking on a small business
$1,800
here.
for a new furnace in January.
Exactly, yeah. And if you're doing renos for the garage suite or the basement suite, make sure it's not taking more than 2 years for you to get your money back. That's a good rule of thumb for what you're expending out.
Beth, Canadian households aren't the only ones facing incredible debt. We've got some countries around the world now trying to deal with their government debt crisis. Ireland, Greece, Portugal. I think it's Greece offering a 30% bond I was listening to on the radio the other day. What's out there from these countries, and are they good investments for people like us?
Well, there's a couple of things here. One is certainly the investing in these 30% Greece bonds. I would definitely liken it to your neighbor's out-of-work nephew. If he's offering to pay you 50%, would you still lend to him? It's the odds about being paid back that have forced these rates as high as they are. And at this point, there's not a lot of people lending, which is why these rates continue to go up. And the credit worthiness, the ability to actually see the potential of getting your money back in the future continues to decline. So that's on the investing in those bonds standpoint. The opportunity for investment actually comes up with a lot of these countries, like many individuals might have to one day, are being forced to sell off some assets, some pretty prized, valuable assets that they have. And that's where the opportunities to invest may come. And that is something to look out for. Not as easy for us at the retail level to begin to invest in through our brokerage or discount brokerage accounts, but certainly something that the companies that we're investing in may be taking advantage of.
Shafik, any insight from your side?
Well, I agree with Beth for the most part. The one thing is we all have the same propensity for a rate of return, and so we see this 30% Greek bond, and we all seem to, we're enamored by this, and we all see the potential. We don't have the same propensity for risk. And if it is possible to add some of these foreign bonds to our portfolio because they do correlate negatively against some of the equity markets, but we have to understand they're extremely risky, and you should do it through a professional manager. Pay a 1% management fee or a 2% management fee. do it through a professional, and do 5 to 10% into the global bond market as a pool. That's what I would recommend you do.
Okay. Switching topics just a little bit, an MSNBC column, we'll have a little fun here, taking note of a common trend, working lunches. And we did a little of our own research. In fact, a 2009 Angus Watt survey shows 53% of Canadians, 53% of us spend our lunch breaks surfing the net, reading, or working. So gone are the day when you sit down at a table and maybe have a conversation with someone over a sandwich. A third take only 16 to 30 minutes for lunch. That's pretty short. 1/5 take no break at all. Are we hard workers? Is this a great thing? Is this a bad thing? What do you think, Kelly?
Jennifer, I don't even know if we're taking a break for dinner with our family.
Yeah, true.
Like, we say we're doing this, but we're not shutting the berry off. We're not taking the weekend off, or iPhone for those out there. I think it's a good thing if you're specific about it. If you speak to your employer and there's some unification of, we're going to do this Monday to Friday, or Monday to Thursday, and Friday we're really going to have fun as a team, or what have you. But just to blindly be eating, I don't even know if that's good for our bodies or productivity.
I have to say I'm guilty. I work through lunch every day.
I am too, and I'm going to rethink that.
Beth, Shafik, really quickly, any thoughts?
Well, I think that it is something that we all have to stop and think about. I agree. I'm also guilty of it. The biggest worry there is, when would I catch up on my emails? If I don't have that opportunity in the middle of the day, when would I do it?
It never ends. We're out of time, unfortunately. Sure. Thank you all for your participation tonight. Great insight. Kelly Keane is a financial speaker and author. Shafik Hirani, a director and senior executive financial advisor with Investors Group Calgary, and Beth Hamilton Keane, a director and portfolio manager at Moore Investment Management, also in Calgary.